Low prices are undeniably attractive, but it is crucial to examine what lies behind them. This video explores how investment companies leverage the appeal of low cost to entice investors. Are these offers truly reliable, or are you falling prey to hidden business tricks? Let us find out the true facts behind this. Welcome to holisticinvestment.in. You might have come across dark pattern strategy while using an app or website. For example, a website might advertise a free trial of a product, but then require users to enter their credit card information to sign up. We mostly associate this to online platforms. Let us look at how this strategy is carried out in insurance and investments in general. Tricks of insurance companies. Premium holidays. Some insurance policies advertise a feature called premium holidays as a perk. In a 10-year policy, they claim to collect premium only for 5 years and offer a holiday for the remaining 5 years. However, what they don't explicitly mention is that you receive the returns generated from the first 5 years premium at the end of the 10th year with no additional gains accrued. Next, return of charges. Certain insurance policies attract customer with the charge return feature, promising to refund the charges collected initially upon maturity. This creates the illusion of paying no charges. But how accurate is this claim? Considered a standard policy charging an allocation fee of Rs 10,000, potential investors might be hesitant due to seemingly high charge. To address this, the company introduces a similar policy with a 20,000 allocation fee accompanied by a promise to return the entire amount after 10 years. This charge return is presented as a significant advantage. Behind the scenes, the company essentially take their required 10,000 from the 20,000 charge. The remaining 10,000, if invested in mutual fund like scheme, could indeed double to 20,000 in 10 years. This is what they return to you after 10 years under the use of charge return. While celebrating this return, it is crucial to remember that it comes after 10 years with no interest earned, and inflation significantly erodes its real value. Return of premium. The first table given here compares the benefit of traditional policy where there is a return of premium and a term plan without return of premium. Receiving 2.26 lakhs may seem lucrative. To earn this 2.26 lakhs, you pay an extra premium of Rs 6,200. Let's invest this 6,200 in other plans and see how much maturity amount is gained. Even a nominal return of 7% gives you a maturity value of around Rs 4 lakhs. Refer the second table. Without adopting the return of premium policy, if you choose to invest in an individual term insurance policy and invest the remaining amount separately, you can earn an additional profit. Now, what do you think? Return of charge and return of premium. Is it an offer or a business strategy of the company? Next, beware of free investment apps. Many companies offer investment service through their online platforms or apps. Though there is no service charge, they earn profit. How? They collect user data and employ cross-selling techniques to promote other products. They create large pool of investors pushing credit-based schemes with high-risk profiles. So, risk-averse investor without proper analysis blindly invest in high-risk product. In these free apps, data privacy is a concern as the information you provide may be sold in the market. As computer scientist Tristan Harris puts it, if you are not paying for the service, you are the product being sold. Caution with no-cost EMI. While no-cost EMI schemes may seem advantageous, they often come with hidden cost. Products sold under this scheme are usually at the maximum retail price (MRP) without the expected discounts. If you buy the same product in cash, you can get additional discounts. These discounts act as a cushion, that is revenue for the respective financing company. Additionally, these companies may charge a processing fee of around 2%. This makes the no-cost EMI plan more of a marketing strategy than a true cost saving product. Next, Ulip versus mutual funds, tax considerations. Investors often seek tax-free investment options to minimize the burden of income tax on their earnings. While it is true that unit-linked policies, that is ULIPs, offer tax-free maturity amounts, the high charges and lack of standardization make it challenging to compare the best performing ULIP. Under mutual funds, you have transparent investment process, clear-cut expense ratio, easy comparison within the same category of funds. This makes mutual funds comparatively a better investment option. In some cases, the after-tax maturity amount in mutual funds might exceed the tax-free amount in ULIPs. Here, the takeaway is one should not invest in a scheme just to save tax. Next, direct versus regular mutual funds. Direct mutual fund schemes tend to have slightly higher returns due to lower expense ratio compared to regular schemes. However, investors in regular scheme benefit from guidance provided by AMFI approved mutual fund distributors. In regular funds, you get assistance like selecting the right scheme and rebalancing asset allocation during market movement. Opting for regular schemes with higher expense ratio can result in better returns than a direct scheme selected without proper guidance. Choosing a distributor based on experience and customer welfare is crucial. We would like to conclude that in the realm of investments, the allure of low cost may be tempting, but it is essential to maintain a vigilant stance and delve into what lies beneath the surface. Exercise caution when considering any investment plan, especially those labeled as cheap. Take the time to thoroughly comprehend the underlying financial details, steering clear of being misled by appealing words and concealed tactics. Companies often capitalize on the prevailing mindset of the people. Until there is a shift in the collective perspective of investors, large insurance and investment entities will continue to leverage these tactics for exploitation. It is crucial for investors to demand quality products that offer value addition rather than settling for inexpensive options. A detailed blog post on this topic is available in our website. A link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.